everybody. I'd like to say, that I missed y'all and I'm ready to do a new video for you after a good solid week and a half off. Let's take a look at the S&P 500 as we get ready to trade July week 3. We are already at monthly OPEX as we head into Monday, July 12th, right? Today, Monday is the 12th, yes. Okay, we'll start off with a look at the 5-minute chart here. And you can see we were rallying up by Wednesday to a new high, only to drop down with a gap down open on Thursday morning. A trade down, try to recover, not getting back to filling this gap, trading down one more time, trying to rally back a little bit into the close. But lo and behold, on Friday morning, gap up open, rally up, fill that gap back to Wednesday's close, and rally above it to close the week off, July week 2, at a new all-time closing high, both daily and weekly, and a new all-time high at 43.7160. So we're stopping now just shy of 43.80, seeing the 80 handle roll play out before our eyes. Here's how everything looks on the daily chart, the roadmap. We are getting big, huge candles now ever since we started the month of July. Here on July 1st, you can see this big move up. We'll follow through the next day. This was a Friday. This was our all-time closing high and weekly all-time closing high. And then when we got back from the 4th of July weekend, you can see we had some volatility and a sell-off. Recover that on Wednesday, only to get slammed down on Thursday with a big gap down, and then recover it on Friday and have just this huge, huge candle on Friday, closing at a new weekly all-time closing high and daily all-time closing high. I'll have to change this on the I'll have to change this on the roadmap here before I post it. Anyway, really small candles to end June, and now we're having great, big, huge candles in July. This is the directional option traders market. This is the kind of market where you buy one or two $8 calls or puts, and you just watch them triple or more. This kind of market here with these little short candles where we move in very slow action, those are, more of a spread traders market. Maybe using a move down like this to sell some puts and then just watch them fade away to zero as the week goes on and you keep all the credit. So that's the difference between what had been going on and where we are at now. I have the feeling that as we end July and move into August, we're probably going to see a pullback. So right now, let's grab the gusto and go for it and try to make some money off these directional calls and puts while we have the volatility with us. When we look at the simplified daily chart, the median line of our bull fork rises now all the way to 45.36. The bottom of the bull fork rises now all the way to 42.39 and above the 50-day simple moving average. So if we were to get into a sell-off and we broke the 20-day and we start looking towards the 50-day, remember that the bottom of the fork needs to be a safety net before we get there, because if the bottom of this fork breaks, this whole median line thing finally becomes null and void. This bottom of this fork has not been violated once since the fork was established near the end of October of 2020. So this is, 7 to 8, this is like 9-10 months going now, this fork. So will be pretty epic if the bottom of it were to break. If we are to continue, as we have seen over and over again, to gravitate towards the median line, starting Monday, that's all the way up at 45.36 and just keeps rising about 6 points a day. So maybe we have a move towards 4,500 in store for us before we end the month of July and then pull back, and maybe we see a run at the bottom of the fork and try to test it one more time and hold it. When we take a look at the options right now, let's take a look at those. Let me get the chart deck up here as well. Let's take a look at the options. We should be using the July monthly options right now, at least Monday, Tuesday, and if you're holding something into Wednesday, that's fine, but take care of your business on Wednesday and roll into the Friday end of day. The volume seems to exist at the $8 window in the 4,300 puts for July, and the volume even greater still in the 4,400 calls. Now, with the S&P 500 taking this run at 43.80, if we come in Monday and take out 43.80 and close above it, I know we're going for 4,400. Maybe we're even going to repeat that behavior that we saw going into the 4th of July weekend, where I said maybe we go to 43.25, maybe 43.35, and we blasted through both of those and went all the way to 43.50. Maybe we're going to see the same action here with the 4,400 calls and go all the way to 44.50 and see those really make some money for us. This is the time to be doing it. Just buy it, put a stop under it, decide what your stop is going to be. If you're spending, $8 to $9 on a single call, what is your stop? Is it $1? Is it $2? Or are you going to go the full 50%, and say that if it drops below the $5 window, that's where I get off the train. Because we know that once options drop below $5, they're being shorted and there's really nothing left in there. Okay, anyway, back to the trade here. If we are going to come in flat or even take a slight bit look below on Monday, keep an eye on those 4,400 calls. If we drop back down, we want to see the halfway back of Friday's range hold. A very big range day, you always want to see the halfway back point of that day hold. If we come in strong on Monday, we're watching for this 43.80 and a takeout and a close above it. If we come in with a gap up open on Monday, maybe you're going to have to pay up a little higher for those 4,400s. Maybe you're going to have to pay the $11 window for them and then set your stop just below the $8 window. If we were to pull back and break down below the halfway back of Friday's range, it'll be very important to hold the 10-day simple moving average, which is going to rise up here right to around where Friday's low was. Friday's low represents gap support to the close on Thursday at 43.20 and change. You can see in this breakdown on Thursday how we broke below the 10-day simple moving average and the entire day doubled down, a little bit more than doubled down from there. So it's pretty serious business if we break the 10-day. Follow this same lead here. See where we started off and where our high of the day was, where it is when we break the 10-day, and take that and expect the range to double down from there, maybe even a little bit more. All in all, though, I would expect this low from Thursday to hold and sort of establish us as a line in the sand, because that was a new low for the month of July here. Here was the first trading day of July, July 1st, and then here was Thursday of last week. So this is establishing our low for the month now. That is going to draw our line in the sand. We will not, see that. I don't think we will see that break for the rest of the month. I think clearly these guys are on a mission here to get us pushing towards that 4,500 and maybe towards that median line of the bull fork. Okay, I hope this all made sense. Hope this video helped you out. Hope you make a lot of money this week on those 4,400 calls. As always, good luck and good trading.